Hello, this is Dale. In this video, I'm going to be talking about measured moves. They are the key to profitably trading options and credit spreads. Measured moves is one of three indicators I use in a very simple strategy that I've been using. I've been a professional trader for greater than 4 decades. The measured moves are at the heart of my simple strategy. It's an easy concept to see, but a hard one to grasp. A lot of my current members ask a lot of questions about measured moves, and I thought it's probably appropriate for me to go ahead and make a video here, just trying to explain this in as much detail as I can, not only for my members, but then for future members. And I will talk to you at the end on how you can become a member of Options Infinity. Again, my name is Dale Brethauer. I've been a trader for greater than 4 decades. I am the stock options coach at www.optionsinfinity.com. And this is the website where I teach people how to trade options and credit spreads, but also when I see a trade that I'm going to make, I send out alerts. And these have been profitable for, I've been doing this publicly for a little more than 12 years. And measured move is a concept at the heart of my strategy. The definition of a trend, an uptrend, is higher highs and higher lows. And as long as you continue to get higher highs and higher lows, the uptrend will continue. But then when it reverses, and then you get into a downtrend is defined by lower lows and lower highs. And as long as it stays with that concept, you'll have a bearish trend. So this is a wonderful idea, and measured moves are built around this. You've probably heard thousands of people talking about the trend is your friend. You want to trade with the trend. And this is measured moves identifies that for you. And then, of course, once you have a measured move, you can put on Fibonacci extensions, which tells you when the price movement might be a little overextended. You know, another adage is you want to cut your losses short and you want to let your profits run. Well, you can let your profits run, but at some point in time, it's going to run out of gas, and the Fibonacci's will tell you when that move might be overextended. So it's the combination of measured moves and Fibonacci's that really tell me when to get into a trade and possibly when to get out of a trade. So let's look at this diagram on the left-hand side. This defines a bullish measured move. If the price is coming down and it makes a low on point A, and then it comes up and makes a high here at point B, and then it retraces to point C. But notice point C does not go below point A. So this is a higher low, And then if the price moves from C on up and passes through the line where there was a previous high at B, let's call this B prime. B prime is right at the point where the measured move has been confirmed. That is the point where we want to put on a trade. That's when we want to execute the trade. Now, the exact opposite is true on a bearish measured move. See, the price is going up, makes a high, then it pulls back, okay, and from B to C, rather than it moving up above here, which would be a continuation of a bullish measured move, it stops and makes a lower high, a lower high. And then from C, it moves on down, and when it crosses B prime, or lower than the B point, that is a lower low. So now we have lower high and lower low. That's the classic definition of a downtrend. When the price hits B prime, that's when the measure move is confirmed. That's when you want to execute the trade. Okay? One more time. On the bullish side, the price is coming down. It comes up, down, makes a higher low, and then it comes up here and it continues past the B point at B prime. That's where you want to get in, because that's a higher high. Where it continues on, that's where we want to use the Fibonacci's to tell us where is it going to possibly go to point D. We don't know. But we do know once it hits B prime, we want to execute the trade, and then we can put on Fibonacci's. And on the bearish move, it's just the opposite, where you come down and then it comes up. It makes a lower high, lower than point A, and then it comes down and makes a lower low at B prime. There's your execute point. And then it continues on to D, and that's where we're going to put on Fibonacci's. Fibonacci's, you just click here, drag down, click here, drag up, click at C. And with Thinkorswim, which I believe is a great platform, I'm not associated with them, but it will automatically put on the Fibonacci's, and it's a wonderful tool. So understanding these measured moves is the key. That's the key to my strategy. We want to trade with the trend, and when we want to pick up the trend as a new trend develops, and that's right at the B prime point. Okay, now let me give you a couple examples here. Let's show this. Let's go all the way here on the left-hand side, and I've got a chart here on the SPX, a Standard & Poor's 500, and let's take a look here. It starts out down here, and this low portion of the wick is the low point. And then we have a high right here, higher than this point. We have another high, higher than this point. Then this one is right in between, and that's a nothing bar. That's a nothing bar. So we've got a high, we've got another high, then we have another high, then we have another high, even though that is a bearish day. It's a red candle. Then we actually have another high right here. And this is point B. So we have point A, we have point B, and now we have a pullback. And it comes down, and this is actually a double low here, pretty close to it. But this is a higher low. So this is C point. It's a higher low. So now we know if it goes above this point here, the measured move is confirmed. Okay? And that will be right here at B. This would be B prime right here. Okay? And then the question is, how far is it going to go? Okay? So we got the C point. Now, where's the D point? That's when the Fibonacci's are going to come in. So if we go to the center chart here, let's put on these measured moves. We want to click right here. This is just a little trend line I'm putting on the bottom of the wick here, then to the top of the wick here, then to bottom of the wick here, and then it almost makes a measured move here, but it doesn't. It retraces back, okay? And then it continues on. So it's still making a higher low. Then when it finally busts through right here, that's the B prime point. Okay. Now, this is kind of a measured move within a measured move because it went from this point here to this point here and then back down and then continues on. So there's really a measured move where this is the first B prime, and then there's another measured move where this is the second B prime. Now, you'll notice that there are two bars. There are two bars here on the downside. I'd like to see at least two bars. Sometimes you'll see a 1 bar retracement, and it's like, I want to see a little bit more than that before I do a measured move. So now looking at, whoops, wait a second. I went ahead of myself here. Let's go to the chart here on the right. Once I have this drawn in, this first measure move goes from here to here, and then here is the B prime point. I'm in, and I put on the Fibonacci's, and there's the 127. So I'm looking for a move. I'm looking for a move here from this point here to this point here. This is my entry. This is my exit. Then I have a second measured move that comes up and makes a B prime point right here, if you will. And I can put on a Fibonacci there, takes it up to the 127. That's my second trade. Bam, it hits the 127, I'm out. So I'm in right here, I execute the trade here, I exit right here. That's the power of the combination of the measured moves and the Fibonacci's. Okay, this is the bullish side. Let's take a look at the bearish side. So we start up here and we have a lower low here. We have a low, and then we have, this is an in-between bar, so we don't even count that. Then we have another low, and we have another low, and another low here, and then it comes up. So then this is the measured move right here. When it crosses this point right here, that is the B prime, if you will. A, B, C, B prime. Now the question is, how far down is it going to go? So now we're in a downtrend. We're in a downtrend. Okay, so we have a low, then another low, then another low, another low, another low. Okay, we have one high, then another low. Okay, so then we have at this point right here, we have a lower high, and then when it crosses right here at B prime, that's a lower low. So we go from this point here down to here. This is A, this is B, this is C, and then this is B prime right here. And once I have that, I can put on Fibonacci's to tell me how far down is it going to go and where is my exit. So if we go to the center screen, I just put on trend lines, and it goes from here to the low, to the lower high, to the lower low. Okay, then we have a second measured move, comes down, low, a lower high, and then a B prime, and then where's it going to go? Well, we can put Fibonacci's on this. As soon as you have this formation, you can put on a Fibonacci. So you click here, drag here, click, drag here, and there is the 127, a wonderful place to get out. Wonderful place to get out. So we enter the trade right here, we exit the trade right here. It stays in a downtrend, and down it comes from this point to this point, point B, comes back up, stays below this point here, so it's a lower high, then it makes a lower low or a B prime right here. Once I have that, I can put on the Fibonacci's, and there's the 127. This is my enter. This is my exit. With this strategy, you're taking profits right out of the middle of a move. And that's the most profitable time, by using measured moves and Fibonacci's. Okay, let me talk a little bit more about Fibonacci's. Fibonacci derived this number sequence where he added any two numbers here together. 2 plus 3 is 5, and it gets the next number. 3 plus 5 is 8, and so forth. This is a number sequence derived by Fibonacci. If you take any number and divide it by the preceding number, you're going to get 0.61, which is called the root Fibonacci ratio. Now, mathematicians came along later and they squared this, they took the square root of this, and then they put reciprocals, and this is what we use for the extensions, the 127, the 161, and the 261. I like the 127. It hits there more often. It gives you nice profit points. The only time I will take a trade a little bit longer than the 127 is if it blows right through there, and then I'll look for it to go to the 161. But let's think a little bit more about this root Fibonacci ratio. I mean, how did this all come about, and how does this apply? Well, the root Fibonacci ratio, or the 0.61, you can see this throughout nature. As you look at the stem of a flower, the leaves grow proportional to that ratio. The spirals on a seashell are proportional to that ratio. Your bones grow proportional to that ratio. My forearm, from my elbow to my wrist, is 12.3 inches. Then from my wrist to my I don't know what you call that finger, but the long finger here is 7.5 inches. Now I'm 6'5", so I got some pretty big bones. But if you divide 7.5 by 12.3, it comes up with the root Fibonacci ratio. So doesn't it make perfect sense that the market, which moves in perfect harmony with nature, fear and greed are part of the market, and the Fibonacci ratio will tell you when it's time to get out of a trade and take the profits. It's a wonderful combination, wonderful combination. So let me just show you on this chart. This is 1 year of measured moves on the ETF of the SPX, which is the spider. My green dots are when a measured move occurred. That's an entry, and then the 127 is where I exit. So this was a profitable trade. This was a wash. This was a wash. Okay. Then we came down and there's a measured move right here, in, out at the 127. I actually see this bar is straight down. I actually stayed in and got out down here, which is at the 161. Don't do that very often, but when I get something that blows right through the 127, I'll hang in there. Here's a measured move right here. Enter, exit, 127. Then you wait, measured move, enter, exit, come down, measured move, enter, exit. Once again, see, we had big bars and it flew right through the 127. And then we had another major move here that was, there was the enter, and this was the exit. And the reason I did that, it didn't hit the 127, it did later on, but the reason I got out is the last indicator I use is the is the regression channel, and I'm not going to talk about that here because I want to really focus on that measured move. But you can see how powerful the measured moves are, and couple that together with the Fibonacci. You've got the heart of a very solid strategy. I just recently did a study on measured moves over the 3 years, and I saw on the SPY, I saw 64 measured moves. 43 of those were with the trend, and out of the 43, 30 were winning. And I defined winning as we had a measured move and it hit the 127 on the Fibonacci's. 21 were against the trend, 18 were winners. And this is interesting because when you get a measured move against the trend, that's showing you that you've got a new trend starting. And those are sometimes more profitable than if you're in a trend. But the average of the 64 measured moves in 3 years was 48 wins, or a 75% average. That is an awesome indicator for you to apply to your trading strategy. Okay, let me go over to Thinkorswim here for a second and show you. Let's just take a look at the SPY, and I went all the way back here just to give you a feel. There's nothing on here except for the candles, and this was from November of 20 all the way up through middle of February of 20. Okay, so let's just take a look at this. It starts out here. That would be a low. Then we have a high. It does pull back, but this is only 1 day. I'm gonna negate that because the next day we have another high, then another high. Okay, now we have a pullback, low, low, a low. Okay, now, so this is point A, this is point B, this is point C, this is a higher low. Now what am I looking for? Once I have this and it starts moving back up, I'm waiting for a B prime. Bam, there it is, right there. There's the B prime. That's my enter. That's when I enter. Okay, so now we're in an uptrend. Okay, so I come back here to this low and I see, okay, this is a high, this is a high, this is a high, this is an in-between bar, this is a high. This is only 1 bar down. I don't even look at that. We have a high, 1 bar down, a high, an in-between bar, a high, to right here. Even though this is a bearish day, it went from here to here. Okay, let me put on a trend line there just to show you. It went from right there to right here. Okay, then it had a pullback, and this is a higher low. A, B, C, B prime, in, okay? Now, so it goes up. I don't even use this bar because this was a very volatile day where it had made a lower low and a higher high. So I don't even look at that one. But notice we're in right here, and what kind of trend are we seeing? Absolutely, it's an uptrend. Okay. So let's go from here. Let's see. We go from here. I'm going to go from here to here. And then I'm going to negate this, but I'm going to say it goes from here to there. So this is my B prime. This is my enter. This is my enter. Okay. And you can see where it goes. You can see where it goes. Okay. Last one. Last one. Let's say we have a low right here. Okay. An in between bar, nothing. Here's a new high. Okay. Here's another new high. Here's another new high. All right. Now we have a low, a low, a low, and there is the enter right there. Right there. Now, sometimes with the measured move, you're going to get a little, you might have to go through a couple of these dips or whatever, but ultimately that baby is going to go, there's a good possibility it's going to go to the 127. So once you identify a measured move and you put on a Fibonacci, sometimes you want to let it go through some of these dips and let it hit the 127. Okay. Okay, let me get out of here and let me get back to the slideshow. Okay, so I hope all my current members this helps, and I'm gonna send this out to everybody for potential members. My guarantee is I'm going to teach you how to trade like a professional. And I'm going to even send you the alerts when I'm making a trade. However, with so many variables in the stock market, like bad fills, time delay from the time I send the alert to the time you act, investing too much too soon, I can't guarantee your results. What I can guarantee is that I'm going to work hard for you because the investment alerts I send out are the ones that I am trading. And then I have webinars every other week where I reinforce these rules and we look at trades and we look at why I got in and how I got out. So to reinforce this, my strategy, I've been doing this for a long time, is a very simple strategy, but it's hard to master. It takes a while to master. You have to go through losers. You have to go through losing streaks. You have to see this work before you really get it down. Once you get it down, your equity curve is going to go positive, and that's what you want to do. So let me go now over to my website and just show you, let's see, I want to go right here. If you go to www.optionsinfinity.com, this is going to be the home page. And if you scroll down, if you want to hear a little bit more about why I'm doing this, you hit that button, start here. If you want to get some, this is 30 minutes of free training on what I do. You just hit that button right there. If you want to go to the membership tab and you like what you're hearing, you go right here. Further on down here, you've got some free PDFs you can get, a little message from me, some message from my testimonials, and then what you want to do is you want to go to the next page, which is learn about the membership, and you want to scroll all the way to the bottom, and there's two things I've got available. One is $99 a month. You can cancel anytime. This includes the alerts. It includes the every other week webinar. It includes being an active member on my website so you can see the actual trades that I've made, a position list. Okay. Or if you want to, you can become a premier member for life. So you're going to get everything you get here on the month You're going to get the webinars. You're going to get the alerts. You're going to get your members homepage where you can look at all the trades I'm making. Plus, you're going to get 4 hours of lessons on how I trade. 4 hours of lessons on exactly how I trade, and access to my exclusive Facebook community. If you want to be a premier member in 20 months, you don't even have this involved anymore. You're just a member for life. So I hope for my existing members, I hope this video really solidifies measured moves and the importance of measured moves. And for my potential people, I hope this is enlightening to see how this can really benefit your trading. And I hope that you join our community either in the every month or as a lifetime premier member. I hope you enjoyed this video. Thank you very much. Bye-bye now.